Welcome to the fellow investors. Today, let us analyze what it means when the Indian stock market closes lower for 5 consecutive weeks. Usually, this typically signals a prolonged bearish phase driven by economic, political, or global factors. Here is what has historically happened in such scenarios. In the year 2022, during June and July, the market declined due to Federal Reserve rate hikes, recession fears, foreign institutional investor selling, and high crude oil prices. The outcome was a recovery after Reserve Bank of India intervention and easing global pressures. In the year 2020, during February and March, the market crashed due to the COVID-19 pandemic. The outcome was a sharp rebound due to stimulus packages and liquidity injections. In the year 2018, during September and October, the market fell because of the infrastructure leasing and financial services crisis, a non-banking financial company liquidity crunch, and global trade wars. The outcome was a recovery after government bailouts and Reserve Bank of India rate cuts. In the year 2015-16, the market was impacted by the Chinese market crash, commodity slump, and Federal Reserve tightening. The outcome was a gradual recovery as domestic reforms such as goods and services tax and Reserve Bank of India policy stabilized sentiment. In the year 2011, during the Eurozone crisis, there was global risk-off sentiment, high inflation, and policy paralysis in India. The outcome was a slow recovery over several months. Common trends after 5-week losing streaks include a short-term bounce, often called a relief rally, which occurs due to oversold conditions. Policy interventions such as Reserve Bank of India rate cuts and government stimulus usually help stabilize markets. Foreign institutional investor flows play a key role. If selling stops, recovery accelerates. The sectoral impact is often seen in banking, metals, and mid-caps, which suffer the most, while defensives like information technology and pharmaceuticals may outperform. The key takeaway is that, historically, a 5-week losing streak has often been followed by a rebound. However, the recovery depends on external triggers such as Federal Reserve policy and oil prices, as well as domestic factors like earnings and reforms. Long-term investors often use such dips for accumulation. For more updates, stay tuned to the fellow investors.